Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Earnings and where does the stock market head from here? Plus top stock picks. That's what we're talking about this week on this edition of the Roundtable with our Executive VP of Zacks.com, Steve Reitmeister, our Research Director, Shiraz Mian, and Market Technician, Kevin Matris. Shiraz, I'm going to start with you on earnings season. Seems to have gotten off to a little bit of a bumpy start with Alcoa. Everybody was kind of holding their breath when they got that earnings report out. But then things seem to get better on the earnings front. Do you think earnings are going to take some of the focus off of Europe this week?
We need to do something with Alcoa as the front in each earnings season. They come out and it's always so uncertain as to what they're going to do. Yes, it's a little bit of a mixed going in the beginning. We are getting just into the heart of the earnings season, and I think as of now the picture looks as good as it was at the beginning of the second quarter or as at the beginning of the first quarter. So we cannot entirely take our eyes off of what's happening in Europe. In fact, they gave us a deadline that by next weekend they'll be coming out with this plan. So all eyes will remain on Europe, but on the domestic front, earnings is the big story. The economic questions appear to have been kind of addressed, and now everybody's trying to look ahead to what the corporate management teams are going to tell us about the earnings outlook for the remainder of the year and next year. So earnings is the biggest question right now, but you can't take your eyes off of Europe yet.
All right, Kevin, you heard him. Earnings is the big story. So what's on your earnings radar this week?
The one thing I do want to say in regard to that thing that Shiraz said about Europe, I read a story today that said Germany was kind of poo-pooing that whole thing. They're saying there's no way we are going to fulfill this dream of fixing this crisis in a week. So they even said that it looks like it's going to extend well into next year. So,
okay.
But as far as earnings so far are looking halfway decent. Nobody has dropped a bomb yet. I haven't seen any dire predictions for Q4 or next year. It is true the earnings growth rate has been slowly coming down. Again, we still are looking at good growth. So far, we're looking halfway decent. If we can continue at this pace, we should be okay.
He's right, Steve. We haven't seen many pre-announcement warnings. Yeah. We haven't seen a whole lot of negative guidance.
Right.
So, do you think earnings are going to surprise to the upside?
Yeah, that's the camp that I'm in here. Again, given low expectations coming into this earnings season, but again, some of that's already been bought into it when you consider the run-up that we've had in the stock market coming into this earnings season. So we already have some of the upside potential already built in. But I think there's still going to be a little bit more upside to the market as, I'd say, over the next 2 weeks here, we really get the heart of earnings season, as Shiraz was talking about. And given the lack of pre-announcements, I like the odds.
Okay, let's talk about the market a little bit. Seemed like everybody was feeling better last week with regard to the market. Market was getting happy again. Europe was not a big issue anymore. Do we finally consider a breakout to the upside here in the market?
Yeah, what I'm talking about is I'm playing a very interesting game of short-term timing versus long-term outlook, and for my long-term outlook, it's still on the bearish side. But here again, low expectations is a great fertilizer for stock market gains, and that's what we had here over the last couple of weeks. And with everyone talking, recession, you've even heard depression coming around.
That's right.
And so from that, and then you get economic data that's not great, but just not that terrible, okay? And so the market overplayed itself to the downside, and so that creates like a vacuum to the upside for a little while. And then when everyone gets sucked into that vacuum, and then they take a look at the economic data again, it's like, well, it's not that great either. And then you start heading lower again.
But you wrote that you thought we were being set up for the classic suckers rally.
Well, that's
more than just a little bearish. That's kind of like really bearish.
So long-term bearish and short-term bullish. And so I'm playing it that I expect a suckers rally. I'm going to try and make profits as we get sucked up into that, and then flip it over again.
Right, it's that sucking zone we heard, right?
And then flip it over again and expect things to go lower. Just simply I don't think the market can truly continue to break out higher without a solution in Europe that seems
That's right.
to stick.
Okay.
And maybe they got something in the works, but all the previous ones in the works were not enough.
Shiraz, you wrote this morning, Monday, the 17th of October, the market's entering a critical phase here.
That's right.
What do you mean by that remark?
Well, the economic questions have been answered, so we are not heading into a recession. Now, the two questions are with respect to earnings, and then the question about Europe. Europeans are supposed to come out with the grand plan next weekend, and we have a bunch of earnings. So by the end of this week, we will have about a fifth of the S&P 500 earnings out, giving us a good flavor of what the earnings season would look like. So this week essentially determines, in my mind, the directional trend of the market. If we get reassurance on the earnings front, and then next weekend the European comes through, I would expect something more than just a sucker's rally towards the end of the year. I would expect more solid and strong and enduring gains into the new year.
All right. All of that said, Kevin, you're the eternal optimist on the panel. Is it possible that the market makes a year-end comeback?
It is very possible. But who knows? But check this out. As I was looking at the charts over this past week, I found a striking similarity between the current conditions and what you saw at the end of 2007 and early 2008. When you saw the market collapse in January of 2008, it dropped. Then you saw the market for a couple of weeks consolidate those losses. Then you saw the market plunge to new lows, and then it was quickly reversed, very similar to what we are seeing right now. We saw that play out last week. But then we saw the market for the next 2 months just kind of slowly trek its way up to the underside of the 200-day moving average. We are right now in the middle of a very large range, 1075 on the downside, 1250 to 1275 on the upside, which is where the 200-day comes in right now. So since the charts technically look almost identical, without any other outside catalyst, I'm not that optimistic that anything is going to be fixed next week. It is possible you could see this dearth of abysmal news allow the market to trek higher to the underside of the 200-day. Then at that point, based on what the economic news looks like then, we will determine whether we plunge lower or whether we're able to break out and sustain a higher rally.
All right. Top stock pick, Steve.
Yeah, I'm going with Verizon, and not because it's sexy or interesting, because it is safe. Telecommunications does, utilities and telecommunications do very well in bearish environments. 5.5% dividend yield, solid earnings outlook. So I think it would weather the storm very well, but simply 3-5 years down the road, that 5.5% dividend is going to do a lot better than most other investment options you have. Yeah.
Can you hear me now? Shiraz.
I'm playing the high dividend yield play as well. Enterprise Products, it's the largest master limited partnership in the country. The yield is 5.5 to 6%. They have, given their size, one of the best dividend growth outlooks and prospects in the entire space. An excellent play both from defensive risk profile perspective as well as the growth perspective. So overall, really good.
Got it. Mr. Matris.
Mine is Starbucks, ticker SBUX. They sell coffee. What I like about them is they've got a great growth rate. They have very attractive valuations. Their margin rate is 3 times that of the industry, but what I recently read was this, very cool. They just increased their prices for packaged coffee by 17% because the price of coffee has been going up. However, if you look at the price of a coffee chart, we are well off of the highs, and there is a lot of speculation that we're going to see coffee continue to go down. So it is unlikely that with the price of coffee now coming down that they're going to pull back that 17% increase. So their margins are probably going to grow even more. I've got a price target of $56. That is a 17% gain from here.
All right. That's the latest from these gentlemen. And with everyone here, I'm Terry Ruffalo.